Next week is going to be a big one on Wall Street. Manufacturing data, housing numbers, oil inventories, and a wave of Federal Reserve speeches, literally from Monday to Friday. And all of this can move stocks, bonds, commodities, even crypto. I'm Emily Carter, and in this video, I'll walk you through exactly what's coming between November 17th and 21st, and what it means for your portfolio. Let's start with Monday. The week opens with the Empire State Manufacturing Index, and the latest reading shows momentum cooling, coming in at 6.1. But honestly, the real action on Monday is the Fed. We have speeches from Williams, Jefferson, Kashkari, Waller, and Logan. Basically, half the FOMC talking on the same day Monday is all about tone. And there's one more important thing on Monday: the U.S. federal budget number. The deficit came in at a massive negative $215 billion. That kind of shortfall always makes traders watch bond yields more carefully, because more borrowing usually means more bond issuance. We'll also see the 3-month and 6-month Treasury bill auctions. And trust me, demand for short-term U.S. debt is one of the clearest signals of foreign confidence. On Tuesday, we switched to jobs, production, and housing. The ADP jobs data shows the labor market cooling. We're looking at an 11,000 decline. Industrial production is barely positive at 0.1%, so factories aren't exactly booming. And the home builder sentiment index stays low at 36, which tells us high mortgage rates are still squeezing the housing market. Meanwhile, Fed Vice Chair Barr will speak twice, and whenever the Fed's supervision chief talks, markets listen. After the close on Tuesday, we get two big numbers: the API oil inventory report, which has been swinging wildly recently, that can move crude prices immediately, and TIC data, which shows how much foreign money is flowing into U.S. assets. Last month, we saw a very strong $126 billion inflow. That's a big deal because it means global investors are still choosing U.S. markets over Europe and Asia. Wednesday is the busiest day of the week. We start with building permits at 1.34 million, which basically confirms that housing supply is still tight. Then comes the huge one: crude oil inventories. A 6.4 million barrel build is significant and could put pressure on oil prices. And then in the afternoon, the star of the week, the FOMC meeting minutes. This is where we see what the Fed actually talked about behind closed doors, not just what they said at the press conference. Thursday begins with a surprisingly strong Philadelphia Fed report. Manufacturing is still in slightly negative territory at -1.4, but that's a massive improvement from the previous -12.8. New orders and capex are improving, so factories might be stabilizing. Then we get existing home sales, which remain steady at 4.06 million units, and natural gas storage numbers, important because the U.S. is heading into peak winter demand. And then comes Friday, PMI day. The latest S&P Global readings show continued expansion. Manufacturing sits at 52.5, services at 54.8, and the composite index at 54.6. That means the U.S. economy is still growing at a healthy pace. We also get consumer sentiment, inflation expectations, and the Baker Hughes rig count, all important clues for the inflation outlook heading into 2026. So what does all of this mean? If the Fed sounds cautious, bond yields might fall and tech stocks could rally again. If oil inventories keep rising, energy names might struggle. Housing data will influence homebuilders and mortgage lenders. And those PMIs on Friday? They could give industrial and AI manufacturing stocks another boost. It's going to be a busy week, full of data that can move markets in every direction. But where there's volatility, there's opportunity. If you want deeper analysis, stock breakdowns, and weekly research, you know where to find me. Stay smart, stay curious, and I'll see you in the next video.